Time for JesterEngine.com's Daily Tech Rundown. Quick snapshot to start. Bitcoin plunged to roughly $67,000 this week, a 15-month low after a months-long slide from its October peak. Crypto tokens, exchanges, and crypto-linked stocks have all felt the heat.
Yeah, it's been a brutal few weeks. Double-digit drops over days, and nearly half its value gone since that October high.
So what's actually driving this sell-off beyond the headline volatility? Is it just typical crypto nerves or something bigger?
It's a mix. We're seeing a rotation out of risk-on assets, a stronger dollar, macro uncertainty, and renewed regulatory pressure in Washington. Add delayed economic data and geopolitical jitters, and you get a recipe for mass rebalancing.
What about the knock-on effects? Does this bleed into broader tech or financial markets?
It already has. Crypto equities and some fintech stocks have softened, and in risk-off episodes, investors trim exposure across correlated risk assets, which amplifies moves.
Short-term pain, long-term questions. Got it. Let's move on. Switching gears to something less terrifying than crypto, Spotify is pushing into physical books. They'll let users buy paper copies via bookshop.org, and they launched Page Match, a camera-powered feature that syncs your place between printed or ebook pages and Spotify's audiobooks.
It's clever. Computer vision to match text to an audiobook timestamp. It solves the old problem of losing your place when you switch formats. Does this make Spotify a bookseller in earnest? Are we about to call it the new Amazon for audiobooks?
It's definitely a move toward retailing books and an expanded audiobook play. Partnering with bookshop.org is smart PR and aligns them with indie stores, so they avoid looking like a pure Amazon clone. Functionally, Page Match and in-app purchases make Spotify a convenient one-stop experience for listeners who also read.
Any risks for publishers or the audiobook ecosystem?
Competition always pressures pricing and discoverability, but it could also grow the market by making cross-format reading seamless. Expect publishers to watch closely. Back to markets. A tech-led sell-off deepened globally as investors fretted about massive AI spending, frothy valuations, and possible tax measures on Chinese tech. Asia followed Wall Street lower, and Hong Kong tech stocks slipped into bear territory.
Right. The fear is twofold: the cost of AI buildouts and regulatory or tax shocks. When growth expectations meet rising expense forecasts, multiples compress quickly.
Practically, which sectors or companies are most exposed?
AI infrastructure, enterprise software, and high-valuation growth names get hit first. Firms with big R&D budgets or narrow moats, think smaller AI play vendors and some SaaS companies, are vulnerable.
Could this be a healthy correction or the start of something uglier?
Probably both. Corrections purge excess optimism, but if spending expectations change materially or taxes land, we could see a longer repricing. Either way, it forces more discipline around ROI for AI projects.
Discipline never sounded so boring, yet so necessary. Anthropic dropped Opus 4.6. They say it's significantly better at coding, long context reasoning, and multi-step enterprise tasks. Importantly, its red team test reportedly found over 500 previously unknown zero-day vulnerabilities in open source code.
That's a headline grabber. On one hand, a model that helps find and patch vulnerabilities is the defensive boon. On the other, the same capability could be misused to automate attacks faster than defenders can respond.
So is this a net positive for security or an escalation?
Both. It accelerates the arms race. Security teams gain powerful scanning and triage tools, but we need strong governance, responsible disclosure, and tooling that limits misuse.
And in the enterprise, does Opus 4.6 threaten jobs or just change roles?
It'll automate repetitive work, code reviews, triage, report generation, shifting humans toward oversight, policy, and higher value decisions. Companies that adopt it responsibly will get efficiency gains. Those that don't manage risk could get burned.
AI as a force multiplier for good and for bad. Classic.
Last item, ExpressVPN expanded into a 4-app privacy suite: Express Keys, Express MailGuard, Identity Defender, and a privacy-first Express AI that's been delayed. 2 apps are live now. Identity Defender and Express AI rollouts are staggered.
It's a natural expansion for a VPN vendor. Password manager, burner email, identity monitoring. The intriguing piece is Express AI. They promise zero data collection and secure enclaves.
But they delayed Express AI. Should users be skeptical about private AI claims?
Healthy skepticism is wise. Privacy-first AI requires real architectural guarantees. On-device processing or strong encryption, clear no-data retention policies, and third-party audits. Delaying to refine that experience could be a good sign they're taking it seriously.
For consumers, does bundling these services make sense?
Bundling can simplify security for mainstream users: one vendor, consistent UX, and integrated billing. The trade-off is vendor lock-in and the need to trust one company with multiple sensitive services.
Trust, bundled subscriptions, and privacy. The trilogy of modern life. That wraps our roundup. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.